And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And we are seeing continued rotation shaping up into year end. Let's take a look at some of those news items. Certainly front and center last week was the Federal Reserve's meeting notes that were announced on Wednesday. The FOMC did reduce interest rates, cut them by 0.25%, pretty much was built into the markets. However, it was not an easy decision for the Federal Reserve governors and those involved in voting because it was a split decision. However, again, interest rates were lowered. Looking at Fed Chair Powell's comments, he was talking about interest rates going into next year, that they will be slow to come as it relates to those rate cuts. So not an explosive response, but certainly a lot going on as usual beneath the surface. Next week is going to be a pretty big week for economic data. We are seeing some delayed information that's going to come out, November employment data. We are also going to get October retail sales data, consumer price index, a big inflation number due on later in the week. And then also we are going to get consumer sentiment. So fairly big as far as some of these numbers that are impactful to the broader markets. But from here, let's go ahead and take a look at the S&P 500 and see where did we close for the week. And here we are, a daily price chart of the S&P 500. And we did have a 1% pullback today so that the S&P 500 closed below that 10-day simple moving average. However, we do have a positive RSI and a positive MACD. From here, let's go ahead and take a look at the NASDAQ, and that had a tougher period this week. The NASDAQ down 1.5% relative to the S&P down about 0.5%. So you can see this tech-heavy index did pull back to its 50-day simple moving average, currently finding support there. However, we do have the RSI now dipping into negative territory. We've seen that in the past. However, it can go certainly one of two ways as far as a continuation decline. And certainly one of the factors, if we go back to this late October into November pullback, we did experience that MACD black line down through the red at the beginning, rather confirming further downside. Also, you want to pay attention to volume characteristics. And back here in the beginning of November, we did get very high volume, and this is distribution. It indicates institutions in there selling. Now, let's take a look at where we stand. At this time, we are poised for that black line down through the red with the MACD. We did see heavy volume, but certainly not as high as it relates to this November period, but certainly on edge, keeping an eye on this NASDAQ. However, I do want to share with you one area of the markets and broader market indexes that did hit a new high. This is the equal weighted S&P 500, and you can see that we are continuing to experience a broadening out beyond technology, which we will get into, a nice positive RSI and that MACD trending upward above that net neutral. Let's go ahead and take a look at the underlying sectors in the S&P 500. These are the 11 sectors, 2-month daily price chart view sorted by relative strength. So up in this area is going to be your stronger sectors relatively, and then also down in this lower right quartile, weaker areas. So financials up here, front and center, certainly a beneficiary of a 0.25% decrease in interest rates. You can see that we are heading up here. Let's go ahead and pull up a longer term chart. You'll see that we are hitting a new high in price. And then also that fact that we did get a multi-month base breakout, decent volume on those financials. Also up here at the forefront, this is XLB, basic materials, gold stocks faring well this week. Oftentimes you will see a flight to quality. Silver stocks also on the move higher. Nice positive MACD here, and then also that RSI. Other sectors of note on the move are going to be consumer related. This is another area that does get a boost in a declining interest rate area, and oftentimes you will see select areas of consumer staples. However, we are still below this 200-day simple moving average. We have a positive RSI and a positive MACD. There are certainly some retailers that are going to be not so much consumer staples, more retail, but they are in that consumer staples area. Ulta, one of them, they came out with strong numbers last week. Let's go ahead and take a look at consumer discretionary, much more retail focused. And you can see this move into a nice potential 6-week base breakout for consumer discretionary XLY. And we will take a look at some of the stronger areas within that sector as well. Industrials, another economically sensitive, interest rate sensitive area, and you can see that we are marching to new highs. This is all about that move beyond tech into other areas, and I will share with you some particularly vibrant areas among industrials and elsewhere. So as we move through, we did get a sharp pullback in healthcare stocks, which had a really explosive move into the end of November, and we are seeing a nice recovery. I will be talking about that in my MEM Edge report on Sunday. As far as taking advantage of this downtrend reversal, there are very sound reasons for this move into healthcare as well, certainly as other areas. And then taking a look at the lower quartile sectors, we do need to take a look at the technology XLK, and you can see that we did close below that 50-day simple moving average. Relative high volume, certainly to recent volume in the broader markets. We now have a negative RSI, and that MACD poised to turn negative as well. We will get more into that as far as the movement beyond, because we're going to take a look at ETFs that are going to drill down further beneath the surface of these sectors. So we are again looking at a 2-month daily price chart view of these sub-industry groups. And let's take a look. I talked about financials hitting a new high. Here we are with KRE, that regional banking ETF, a nice double bottom formation, a nice base breakout on Wednesday. We are certainly in an overbought position at this time. However, we did see nice volume on that Wednesday base breakout, certainly a very compelling area. I talked about XLB and the basic materials. Here we are with a view of GLD, that gold shares poised for a potential 2-month base breakout here as it is seeing strength. And it is one area, if we go back certainly to this huge run up in September into October, that it can sustain an RSI above 70 and continue to advance. We'll be keeping a close eye on that area as well. XRT, this is all about retail, talked about interest rates benefiting that area, but we're also seeing some nice earnings. So I will share with you a couple of names. We looked at Ulta and others that we can also take a look at that are faring well in a declining interest rate environment, but again, also earnings driven as far as these stocks moving higher. Small caps had a very good week, up 1.6%. This is another area that fares well in that declining rate environment. I'll share with you a couple of names and the really pronounced move that we have seen into these small caps. That was the Russell 2000 small cap index. So from here, we do, of course, want to be aware of those areas that were down, certainly more than the markets. And first up here is semiconductor stocks. SOXX is the ETF that I use. And you can see that we are in the throes of a pullback, down 4.8% today. That RSI just sitting here at 50, but certainly poised to potentially trend lower. All about earnings certainly were released after the close yesterday. Broadcom came out with very good numbers. However, you can see this drop lower. I believe their profit margins were, the expectation going forward were reduced, but it was enough by way of news that the stock pulled back on tremendous volume. And also of note is the fact that we are sitting here at this 50-day simple moving average 362. So we did close just below that 50-day simple moving average, negative RSI, and big volume. And again, it did certainly impact other semiconductor stocks. Also, taking a look at software, semiconductors and software for the past 2 weeks had been on the move higher, but here we are with IGV, the software ETF, and you can see that we are pulling back here into this 10-day simple moving average, finding support. It's a very mixed group, I will tell you, but we have a negative RSI, and that MACD did not quite get into positive territory. There are a couple of standouts, but by and large, it's been a struggle for those software stocks. And also, you do want to be aware of IHI. That's in that healthcare space. When we look at healthcare, this is certainly one of the growthier areas, and it is continuing to pull back. So ideally, it is not something that you want to see as it relates to the growth area, but we are sitting up here at that 50-day simple moving average. We can also take a look at an industry group that is in healthcare that is looking quite constructive. This is the S&P 500 pharmaceutical ETF. I'm going to go ahead and mark this up. This is an area that we have several names on our suggested holdings list that are faring quite well. Let's see if I can fare a bit better with that markup there, and you'll be able to see this high, tight flag formation that oftentimes it's simply a period of consolidation before a potential another leg up. From here, I want to take us to some of the broader, bigger themes that drove price action last week. And first up is an area that I've not talked about here, but it is all about space exploration and the Golden Dome initiative. There was big news out last week about it. I'm going to share with you certainly one of the bigger winning names to highlight as far as getting into this particular area. This is Rocket Lab, RKLB. They did announce this week that they had progress in testing their neutron rocket, and it's all about the government's huge $151 billion budget that was announced in August, which is being put toward a multi-layer defense system. It's employing a constellation of satellites with sensors and space-based interceptors. So it's a whole new economy. Last week, we did hear of announcements of contracts being awarded. So we are beginning to see vibrancy shape up in this particular area. I can share with you certainly other names that are on the move higher. This is Voyager Technologies just moving back into an uptrend. Certainly the big news last week as well was that SpaceX, a huge player in that satellite space, they are due to come out with an IPO in the beginning of 2026. So that got investors interested back in these Golden Dome types of satellite names that are on the move higher. Also, I did want to share with you other larger names that are also involved in this space exploration and certainly movement toward protecting the space area, and that is GE. This is GE Aerospace. The stock had a nice advance today, up 4%. This is all about Citigroup coming in and upgrading their outlook for the stock. We did close just at that 50-day simple moving average, but we do now have a positive RSI, positive MACD crossover, and pretty decent volume. So certainly one for the watch list. RTX is another defense-related name that had its outlook increased, and you can see that we had this pullback to that 50-day, and we are now in the throes of forming the right side of the base. But really of interest to me is this black line up through the red, a nice MACD crossover into positive territory. I talked about small caps being on the move higher, and from here, I also talked about industrials on the move higher. So we are going to take a look at some smaller cap industrial names that are in the beginning stages of potentially reversing their downtrend. This is Construction Partners, ROAD, and the stock is just at its 50-day simple moving average. We have that MACD poised to get into positive territory here, joining a positive RSI. So certainly a name worth keeping on your watch list. GVA is another industrial name, much more advanced in its move higher. I'm going to take a moment here and mark up this chart because we are experiencing this nice base breakout, pretty decent volume here on that move higher. And then also we do have a positive MACD. Go ahead and highlight that volume. We are in an overbought position, however, so you would want to consider that before piling in, but also of note, you will want to take a look at that longer term chart. We're going to go ahead and look at the weekly chart for GVA. This is Granite Construction, and you will see that nice multi-month base breakout also shaping up. Another company in that industrial space is not as well known. IESC is the ticker symbol, and we can take a look at this stock because of note last week was a very pronounced move out of AI related names. And I wanted to highlight for you is that not all AI related stocks are under selling pressure. This is IES Holdings. The company is involved with providing electrical services for data centers. And you can see, despite a very pronounced move, high valuation. This is a weekly chart. Let's go ahead and pull up a daily, and you can see that the stock has advanced, certainly unlike many of those mega cap AI related names that are coming under selling pressure. These crowded trades are coming under distribution. I'm going to talk quite a bit about it in my Sunday report because it's an area that we have been involved in quite heavily. So here we are with CSW Industrials, and this particular company is in the throes of a downtrend reversal. And this week's move was all about a JP Morgan upgrade, and it is viewed as a cyclical play with that declining interest rate environment and a low valuation. Another name that we can look at, small cap, that is going to be related to the space exploration. And this is SATS, and the company is EchoStar. Many of you may be very familiar with the company, but we did see that nice base breakout into an uptrend, certainly overbought, but worth noting as it relates to a move into those satellite and space-related stocks. I mentioned that consumer discretionary retail stocks on the move higher due to stronger or better than expected earnings. Lululemon among them, the stock gapped up 9.5%, was up quite a bit higher before closing the day in the lower portion of its trading range for the day. And that is not a bullish price action. So we can see nice high volume, however, heavy selling into the close. The stock is still below this downward trending 200-day simple moving average, not quite ready for prime time. They also announced the addition of a new CEO, and that did help the stock as well. We looked at Ulta. Let's take a look at another company that is on the move higher in this space. This is Boot Barn, and you can see this nice advance out of this flat base into a nice 5-week base breakout. Last up, we'll take a look at Urban. The names that are on my watch list are going to be these bigger names that have an historical predisposition to fare well when they get things going. Here we are with Urban Outfitters, gap up in response to strong earnings. This was at the end of last month. We had a back and fill formation, and now on the move higher into an uptrend. Last up, another driver of price action this week has been news that the Bank of Japan is expected to increase interest rates this week. And that is something that they don't do regularly. The last time they did it was 11 months ago. And it's all about that yen carry trade. Investors borrow yen near 0%, and then they use those funds to buy US treasuries or to buy those faster moving tech stocks. And the expectation is that the Bank of Japan is going to increase their interest rates by 0.25%. And again, for them, that is quite high. We've seen a negative impact in the past as far as that yen carry trade not being quite as attractive. And again, oftentimes it will impact. In this case, we did see interest rates rise this week. We are now at about 4.2 on the yield for that 10-year. We could see a continued uptick in interest rates, not great for the US markets. And then also that continued rotation out of those heavily traded AI-related stocks. We looked at Broadcom. We can take a look at MU and some of these other names that have been holding up really quite well, pulling back rather sharply today. Last up, we're going to take a look at an M7 name that also experienced negative price action, and that is Meta Platforms. The stock had been deteriorating, did begin to pick up here, but when you see this type of candlestick move, because we did initially have a move back above that 200-day simple moving average, heavy selling coming in so that it closed in the very lower portion of its trading range with a now negative RSI and that MACD not quite getting into positive territory. And that is it for this week. Lots to digest, but certainly very, very compelling as it relates to market rotation, market movement. If you would like to get more information about that, as well as stocks that are positioned to benefit from that, go ahead and use that link below for a trial 2-week at no cost of my twice weekly MEM Edge report. Also hit that like button if you like what you've seen. As always, comments are very welcome. Hope you have a fantastic weekend. I'm going to look for you here again next Friday.